So what we're going to do now is talk about the GBP NZD trade that I took this morning. Now, normally on a Monday, we come in very even keeled, not conservative, like we want to not trade, but not overly aggressive either. We want to come in, follow our rules, follow the checklist, and find the most probable pair. Last week was a slow trading week for me. If you guys remember, we had a couple of setups present, but they were low probability. We call them C setups. But today, we had a B setup present itself on a Monday, which is kind of rare almost. I don't normally find great trades on a Monday, but here we had a great setup and a nice little win to start the week. I think the big takeaway to start off this little clip here is understand that the market, the universe in trading rewards good behavior. So if you can be disciplined like I was last week, all week, sit flat, wait for good setups, and if they don't present, you're still waiting, the market will come around and reward you like it did here for me today on a Monday, giving me a great start to my week. So don't ever take one trading day or one trading week or even one trading month as a determining factor of your potential success and of the potential trades that could come from you for you in the future. And this is where backtesting your systems really comes into play, because if you backtest your systems during slow periods, you'll know, hey, my systems present trades, it's just not all the time. So yeah, naturally, some days we're going to be flat. Some days we're going to see low probability setups. Some days we're going to see great setups. That's what happens when you have a trading system. And it's about then exercising discipline in that system to not take the bad setups, not take the low probability setups, and to not trade when there's nothing and to go and force something crazy, to not do that. So discipline has to be implemented and exercised and practiced within our overall trading plan, within our trading system, even if that means sitting flat for a week, because then the trading universe comes back around and gives you a great trade here on a Monday. So first thing I'll show you is the P&L. You'll see I have one entry price here, 1.98999, right? This is the same entry price. You can see it all the way down here. My best exit was at 199.21. You can see I was out at 21 with a piece, at 20, at 19, at 21.2, and then I got stopped out with the remaining small piece of the trade here in profit, just about a pip in profit, okay? And that was what I posted on Instagram this morning. So now let's look at the chart. What you'll see first, everything we look at, the first thing we look at every day is market sentiment. You can see from the changeover of day, the yellow market sentiment, the L50, that is in the buy zone today, telling us that we can be long biased. We want to confirm that with price action. And if you look, where's the trend here? Clearly long biased from Thursday into Friday and now today into Monday. Now, Friday was a bit of a pullback to the Thursday high consolidation area. You can see that kind of confirming this level right here as support. It was resistance here. See, it was resistance in the afternoon on Thursday, broken Thursday afternoon, tested Thursday afternoon, and then confirmed as support here on Friday. So now we understand that this is where we're using this price here at 198. We'll call it 198 flat, 198.05, whatever it is. That's our support for us to move up towards that Friday high set here in the Asian session. So when we wake up this morning and we see EMAs are still in an uptrend, TDI looks great for longs, and we're actually above that Friday's high zone. See how I have it boxed off in blue? That makes me think, okay, this is going to be our new resistance turned support to then trade higher off of. Now, we want to work through the checklist. So market sentiment looks good, but you definitely got to blow up the TDI. I know Josh brought this up. This is falling. You see how from the price action high to the RSI high, you can see RSI is falling, price is rising today. So that is bearish divergence, absolutely. And that's what I put in here, very slight divergence on top against us. And that's why I gave it a B setup, because there's really nothing else wrong with this setup. If you go through the checklist, this is in an upshift when we look to take the entry on the 1 minute. We're going to get to the 1 minute chart in a second, because you know the D1 entry is 15 minute and 1 minute. But you can see it's in an upshift. 8 EMA is above the red 21, which is great. We're coming off the 50 EMA, which is great. RSI is above the red trend line, which is even better. So this looks great to move towards the divergence line, towards the high a day set right here at 3 a.m. And if it can clear that zone, I was thinking it could go 161 up to ADR here, which would have put us right near that 2.0 significant price level. You can see it up here. And I still think as long as it doesn't fall off a cliff today, it could still make that move higher later today or even tomorrow. So it'll keep that bias. But again, no market moves in a straight line. And this is why I'm such a big proponent. I push this on you guys so much to lock your stop loss no matter how much you love the trade. Because as you can see, what does this do? Naturally, as it moves to high a day, slows down here with this hammer candle and starts to turn back down, it's trading from just significant zone to significant zone. It traded from the high a day zone back to that Friday's high zone that was clearly significant overnight. So it is not surprising to see it hit that zone and come down. And that's exactly why I closed the trade as it moved up to that level. Now, it's not just the fact that it was a significant level. It was also the fact that it was over 2R from my initial risk. You can see at most when this moved up to 199.28, it was up over 2R, actually over 2R. So to close most of my trade in this zone above 199.20 and between 199.30, which is the high of day zone created with this pin, because the two candles to the left and the two candles to the right are not higher, it makes a lot of sense. And that's why, again, if you look at the P&L, where's my exits? 21, 20, 19, 21, right here in that high of day zone, because I know it can slow there. And that's why I lock the stop, because I know it can bounce and pull back. I'd rather get out like I am now. And if this wants to come higher and present an entry, I can get back in. There's nothing that stops me from doing that. But what if I didn't lock my stop and it ends up falling all day, and then I end up losing more money on the trade, where I could have just been at, a profitable exit as it moved up and then just wash on the rest of it like I did? I think that's the right approach. So whether it's an A setup, a perfect setup, a B setup, a C setup, it doesn't matter. Always lock your stop. When you lock your stop changes for high probability A and B setups, I wait till at least 2R. As you can see, this moved 2.18R. So naturally, no matter how much I think this can move to 80R, my stop has to be locked. And today, that's what made me money. That's what prevented me from giving back any money at all. Also, we have this divergence line. Now, Josh brought up the divergence. I didn't like the divergence at first. The main reason why I wasn't taking the divergence super serious this morning is because it does not come off an overbought level. I think divergence off an overbought or oversold level is much more serious. But as you can see, the RSI was only at 66, so it's not at 70. It's not at that overbought level. So that's why this didn't scare me out of the trade. And I could still get 2R to the divergence line anyway. And as long as I can get 2R, I'm taking the trade. I'm putting money into it if it fits the system. So now, that's the whole 15-minute. Let's go to the 1 minute, and I'll show you where I took the entry and why I did. So if you look at the 15-minute for a second right here on the right side, I know you guys are good at seeing both here. Let me move this just so it's not as crowded. You can see from where I took the position, I'm going to show you it right here, 198.99. Yep. If you look, I'm going to sync up this white line on the 1 minute. This is the bullish divergence on the 1 minute that created the idea. Look at how that bullish divergence comes right off the 15-minute 50 EMA. That's the same thing as the 1 minute 800 EMA. And that's the significant level that we've back tested for these D1 entries to come off of. So now, if you've watched the D1 deep dive, this is going to make a lot of sense to you. The D1 deep dive is a 2-hour piece of bonus content that I just added to the advanced course. So when you buy the courses and you join ASFX, I always give updates to those courses for free. It's one-time fee, lifetime access if you're joining ASFX. I don't charge subscription fees. I don't do anything like that. I think that's counterintuitive. It's a conflict of interest. If I'm out here saying I want to help you guys make more money, how can I charge you for something every month? That doesn't help you make more money. You know what I mean? So if you watch the D1 deep dive, this is going to make total sense to you. The divergence sets in. Instead of trying to buy it here or buy it here, we're waiting for that market sentiment line to pull itself into the buy zone right here, as it is above the 50 value. And as it holds the 50 EMA, I'm using that retest of the 50 and the most recent higher low as my stop loss to then see it extend and continue to move higher. If the market sentiment line dips into the sell zone, that's when I don't really want the trade anymore. And if you look, market sentiment hits the sell zone right here, right? If I mark that with a vertical line when it comes into the sell zone, you're actually still in profit a little bit. So I could have closed a little bit more of it there. Either way, it was so close to my stop. This pair has a little spread, so it probably would have tapped me anyway. But you can see that's your early exit signal for most of these D1 trades, to close some of it. Maybe not close the full thing, especially if it hasn't moved 1 or 2R yet. But once this happens, because sometimes this market sentiment will dip into the sell zone and then pull back up. But once this goes from where the zone that you want it to be in, because you're buying, you want that yellow line in the buy zone. Once it comes down into the sell zone, most of those trades are beat. So closing a piece of it or all of it is always a good move, in my opinion. And you can see, pretty painless. 15 minutes or so, and I'm in profit up about 2R. It sits sideways at about 2R. It forms some bearish divergence here on the 1 minute, which tells us it could come down, especially because that's coming off the 15-minute bearish divergence and the high a day zone, right? Like here's that high that we set earlier in the day. It's already rejected there. It's not surprising to see it come back down. So you don't be greedy. You don't marry it. You manage it. That's it. Don't marry your trades. Manage your trades. Somebody tweet that at me. That's good right there. Manage your trades according to the plan. So it gives me the entry, it moves up 2R, lock the stop, close profit. As it moved a little bit higher, like I said, took a little bit more off, and then it started to come back down and pretty quickly moved lower to hit my stop loss and profit. And that's it. Simple. Following the rules, sticking to the D1 entry system. Now we just wait and see if we get another signal today. That was it. That is the GBP NZD trade today. And again, here's my P&L. So let's see if we have any questions.